Hello, I'm here with Ben Morris, who is an investment director at Aberdeen Standard Investments, who has a focus on Asia and Chinese equities. That's what we're here to talk about. So, thank you very much for joining me, Ben. How are you?
I'm very well, thanks, Dylan. How are you?
Very well indeed. Now, let's talk about, everyone's talking about China, but let's talk about specifically, I want to talk about your actual fund, so your China A-share strategy. So could you just describe what it is so we know what we're getting into today?
Yeah, so we've got a high conviction China Asia strategy that's been running for just around 6 years. It's got assets under management around $6 billion. So it's a pretty meaningful strategy. We've delivered some fantastic sort of alpha outperformance over that period. And it has a pretty unique performance profile. So where the stocks we're picking or the companies the team are picking have worked well, and so we've been outperforming when markets going up. But actually, our quality focus, our sort of long-term quality focus that the team take, has enabled to offer a lot of protection or defensive characteristics when markets have been falling. So we know that within Asia and emerging markets, markets are pretty volatile. That's similar in China as well. Now, what gives us confidence, I suppose, in running this fund is we've been investing and analysing companies in China for over 30 years. And we have other funds that look at broad or all China, which captures sort of the Hong Kong listed names, the VIE structures and the like, for much longer than that, since the early 90s. So there's a lot of experience, a lot of knowledge and understanding of these Chinese companies, and that's super important when you want to start investing within the country, and understanding the nuances, the language barriers, the etiquette, the political backdrop. So that deep knowledge and understanding, very, very important when you're going to consider putting your clients' money to work in China.
All right, fantastic. Now, there has been, of course, a lot of interest in China recently across the world. A lot of investors, not only Asian investors, but everywhere as well, we've seen. So why do you think there's a specific interest in China now? What's been going on?
Yeah, I mean, it's a great question. So, we've had a huge amount of interest in China, and particularly in onshore China. For many a year, it's probably not been an active decision for many investors. If we think about China, the market itself, we're talking about the second largest economy in the world, and I know some of these statistics, clients are going to be fully aware of this. So second largest economy in the world, second largest stock market, not far behind the US, and with a market cap of just over $10 trillion. So it's very meaningful, it's very relevant. And if we think about growth, globally, Asia's been an important driver of that, and within Asia, China's obviously a hugely important part of that as well. So this recognition of the importance, the size, the scale of China is certainly there, and I suppose one of the sort of the net effects of that is, and I mentioned sort of becoming an active decision. It's still very small. So we think about MSCI All Country World Index, we're talking at sort of less than 1%. We're talking about 0.6% weight of that index. So still very small, but it's there and it's growing. So if we think about MSCI emerging markets or Asia Pacific indices, we've seen the inclusion of onshore Chinese equities into those indices. We've seen the inclusion factor move from 5 all the way up through 20%. And if it was to move all the way to 100% inclusion, sort of at today's prices, you'd see the combination of offshore China and onshore mainland China that we're talking about today would be over half of the MSCI Emerging Markets Index. So there's a recognition of the size and scale, the inclusion into indices, the growth that's being generated, and we saw in 2020 one of the few sort of world leading economies to generate growth. And obviously the stock market returns have certainly put it on the map. So from a risk perspective, there's an understanding that the importance of China is coming, but also the growth opportunity that very much sits there. We can see that in the returns generated.
So what about for non-Chinese equity investors then? Are you seeing a lot more activity in the A-share market?
Yeah, I mean, that's a really interesting question, Dylan. I mean, we've seen the stock market, the equity markets have had a good strong run in 2020. But actually, if we go further back, we're thinking about international investors or non-Chinese investors. China's been a pretty difficult market to invest into. Closed markets, closed economy, But what we've seen was back in 2014 with the launch of the Stock Connect. That was a bit of a game changer for the international market. So we've seen a broader number of international investors have the ability to access onshore Chinese companies. And if we think back to sort of that 2014 period over the last sort of 7 years, we've seen over $180 billion of net inflows from foreign and domestic investors. So we're seeing a huge amount of interest, investors voting with their feet and allocating to companies on the mainland. So, very important growth we've seen coming from that.
Mostly when people invest in China, they think of a small number of the super stocks like China Mobile and Tencent and Alibaba and so on. First of all, are those still stocks you invest in? And second of all, could you just give it as an example of like a stock that most people haven't heard of and why you're excited by it, so we get a notion of what we're really buying?
Investors are getting exposure to China will recognize big names like Alibaba or Tencent, and these are names which are a large index constituent, not of the onshore Chinese market, the China Asia onshore market, but of all China, Asian equities, emerging market equities. We don't invest in those companies. If they don't have an onshore listing, they will not be a part of our strategy. So what you get with our strategy or with onshore Chinese investing is something actually a little bit different. So we could be talking about traditional Chinese medicine or specifically some direct consumption plays. And I think one of the areas that's really interesting when we're looking at onshore China is, and we can come on to some of maybe the geopolitical issues, but some of the companies that have really been very successful, and actually we believe not just been successful to date, but actually have a very long sort of structural runway of growth to come through, are those that are aligned to the Chinese consumer. The Chinese consumer really has driven the Chinese market. That's one of the reasons it's offered quite a different return experience from Chinese equities. So through the pandemic, we've had the Chinese tourists have been traveling. Yes, it's been to Hainan Island or within China, but they're back out and free to move, or they are spending. So the premium end of consumption. So a couple of names. The first one would be sort of the Baijiao maker, so the national drink, the national liquor. There's two companies that we invest into. One is Kwai Chow Mao Tai, and the other one is Rulang Ye Bin. And these companies are really interesting. They're not like your traditional Western drinks companies where you sell the product, you have 60 or 90 day sort of payment periods. These liquors, this product is in such high demand that generally the product is paid for upfront and ahead of time. So we're talking about companies who make the national drink sort of eponymous to the region. So a bit like champagne in terms of where the alcohol is made. Cash payments upfront. And so when we think about these companies, they're in a very strong sort of qualitative position. So their balance sheet strength is very high. They have cash on their balance sheet. They're not borrowing and leveraging up in order to manufacture the product with which to sell and have these sort of long turnaround times for payment. So very strong positions. Another example would be China Tourism Group. So they're the leading duty-free sort of store operator with bases in Hainan Island, where, as I said, mentioned the onshore Chinese, this is a popular tourist destination. Tax benefits of traveling there, and there's been a lot of relaxation of the rules. So increasing allowances for Chinese tourists to spend whilst on holiday, before they go on holiday, after holiday. The allowances have been increased so they can spend more, and just the sheer scale means that China Tourism Duty Free is able to source, whether it's premium in handbags or perfumes or liquor, at a far more cost-effective price. So the economies of scale argument kicks in as well. So very profitable businesses, very strong sort of capital positions, and the growth doesn't look like slowing down anytime soon.
All right, let's talk about political risks and other things, potential downsides, although maybe there are upsides as well. Obviously, we've seen plenty of political tensions, for example, with the US, and then threatened trade wars and so on. And there's also this ongoing debate about IP and whether IP is being stolen by some Chinese companies, being reused or not. So just give us just a state of play of that part of the market, and whether that, first of all, is a potential worry for you in any of the stocks you hold, and actually whether that is how it impacts on your portfolio.
Okay, yeah. So if we take a look at what's been going on, there's been obviously been a lot of tension. So we go back a few years. We're talking about the trade war, the movement of goods and services, imbalances between the US and China and other countries around the world. And then this sort of discussion or those tensions have moved on into the technological space, the importance of IP, who's creating it, who's taking it, who's using it, and is that being done in the correct manner? So we've seen a pretty strong stance taken by the US, and obviously with presidential changes at the top, we don't see that lightening or becoming less in the near term. There's a very strong desire from across the political parties in the US to take a strong stance or a strong view. So that is a potential risk. We have to monitor that. We have to understand that. Very minimal impact on the types of companies that we're investing into within our portfolio. Having said that, we do think about, from a Chinese perspective, what is Xi Jinping, what are Beijing doing? And what we've seen is a very clear shift to China ensuring that it is self-reliant. It doesn't want to have to rely on technology from around the world, US in particular. And so we've seen a big sort of impetus from the top down and from the bottom up to enable lots of companies to start creating their own technological sort of needs, requirements, the componentry. And so this shift to self-reliance is becoming ever important. Now, even with all the tensions and the geopolitical sort of concerns, there's a few areas. One is I think the world is moving broadly in one direction in terms of the view on climate, renewables, and sort of going green, as it were. And there's support from that globally. And China is a strong beneficiary of that because they've been investing in large parts of the supply chain or the manufacturing processes required to move countries in that direction. So if we think about solar panels, the components and the materials required, over 90% of that's produced in China. If we think about electric vehicles, the batteries, part of that process and the requirement to build electric vehicles, again, sort of in the mid 70s there. So China has got a very strong position as we move forward in that shift. And that is something that everyone is moving sort of in the same direction.
Okay, thanks, Ben. That was fascinating. Thank you so much for your time. I'm really looking forward to the main event, which is, to remind you all, is Spotlight on Asia, which is happening on Thursday, the 15th of April at 9:30 a.m. Hope to see you all then.